Hello YouTube and welcome back to a new 15min market update. I'm Stefan, full-time day trader and co-founder of 15min. Today I'm going to explain you what I expect next for Bitcoin, Ethereum, the altcoins and above all the stock market. I also explain why next week's FOMC meeting on Wednesday will be very important and device for the next bigger move from BTC and in which direction it could push a BTC further. So now let's jump into the charts and let's see what I expect for the coming week. Welcome 15min to another weekly market update from my side. Today we are talking again about BTC, Ethereum, the altcoins and the general market outlook for the coming week. So now let's jump into the charts and let's see what I expect for the coming week. First of all, here is my BTC trade again, and last week I mentioned the important 90k control point and that it will be important if we can reclaim it and hold it sustainable or not. As you can see here now, we are in a 3-day chart and we hadn't seen one 3-day close above it. So the 90k, the first control point, is still a resistance. We saw it overcome, but not a 3-day close above, so it was not sustainable, only for liquidity grab before we went further down again. So overall, the picture from last week hasn't really changed. And above all, we are still more in a bearish picture because we can't reclaim the first important region as a support point again. Overall, to make it clear, my Bitcoin position is still the same like I talked it last week. If we drop into the 75k region, there is another entry point from my side. Until then, another buy from me is not in my interest. So for me, my Bitcoin position is still open. The next buy region in the 75k is ready to get a new average entry price below the 90k control point, as already explained in the last few updates and above all in the trade update from BTC. So let's now jump also into BTC, what I expect and why the FOMC meeting is a very important date to know for the coming week. Let's begin with the liquidation heat map. We can see here that above all in the last week more shorts came into the market. We can see a very significant cluster in the 95k, in the 100k and in the 104k region. So more shorts entered into the market in the last week. This is a very important sign because that means now that in general liquidity is also more in the upward side, which is a very important point to note. If we go on a higher time frame, so in a 6-hour chart time frame, we can see that this cluster until the 100k level is getting bigger and bigger and gaining more volume than the cluster below us. Very important to understand because liquidity is flowing into the direction where the market makers want the price heading. So for me, the plan is still the same. If we can hold the 90k, the first control point sustainable, the next target would be definitely higher targets with the 100k region next, because there is much liquidity up there, as we can see here now. What is also very important to note is that also longs are going into the market. So we are seeing general dip buyers entered into this dip, for an example, and also into this dip. So overall, we can see that every time when the price is going upwards into the 95k, so into the short cluster, more shorts are entering the market, as we can see here, tighter yellow bulks. And if we drop further down, the bulks below us are also getting tighter. So it means shorts and longs are very active, and we are creating here a very interesting range, because we can see that we in general seeing here between the 94k and the 85k a small region, and above us and below us shorts and long liquidations are building up. But what means that for me for the coming week? Next week we are seeing the FOMC meeting, and the FOMC meeting will be the very important event this year. So we don't have any very important macro event left after the FOMC meeting, and before such a very important FOMC meeting, such ranges building is not really uncommon. It's really common that we're seeing something like this before an FOMC meeting. It means that in general market participants are betting for an example on higher prices because the rate cut odds for December are going higher, and many shorts also went in because they're expecting a hawkish Powell. So we have two very important zones now. We have the 100k short liquidation cluster and the 80k long liquidation cluster. And for this example, what we're seeing next week, it will be devised on the FOMC meeting in which direction we are going. If we're seeing the rate cut, so here, let's begin here, where I can see here the rate cut odds for December is in green. So we can see in green in general, we have a 100% rate cut odds in December from nearly 30% earlier in November last month. So this happened because we have more dovish data. In general, the labor market data is going worse and the Fed need to step in. We had also very much governors that are stepped in and said, yeah, a December rate cut is more likely because we need to react, and this pushed the rate cut odds even higher. And this is also why more longs are coming into the markets, because they're also betting on December rate cut and in general more dovish Fed, which would lead to a bullish momentum at the Bitcoin asset, because Bitcoin is still the last point on the risk asset list. And if we're seeing a better monetary policy, which is more for risk assets, BTC will react bullish from it. And which will be very important is the January rate cut odds and also the March rate cut odds. Why? Because we're seeing in general Powell is expecting rate cuts from meeting to meeting, and it will be very interesting if Powell is more hawkish or bearish into the next few months. As we can see last year also in the December meeting, we heard from Powell that this was the last rate cut and it was very uncertainty into the FOMC members, and this had a very bearish reaction at the markets. And this will be also very interesting at the December FOMC meeting, what Powell is expecting. If he says more dovish, and especially also, labor market is more weakness, we can cut more rates because also inflation is still cooling down, then I can well imagine that we are overcoming the 90k region and pumping into the 100k, because this is more dovish for the risk assets. But the problem is, if Powell is more hawkish, again, I can well imagine that we're going for the long liquidation cluster below us. So basically the FOMC meeting should devise if we are seeing more dovish or hawkish momentum in the coming months in the monetary policy in the US sides. If it's more hawkish from Powell, we are going lower into the 75k region again. If it's more dovish, I can well imagine that we are pushing higher again and liquidating the shorts in the 100k region first. After this one, it will be interesting, can we hold the 90k region sustainable or not? But this we need to see how the FOMC meeting is developing, because if it's really dovish and Powell expecting more rate cuts and this in general more dovish, I can well imagine that we're bouncing further and higher. But for this we need to remain seen, and also above all, I don't really expect that much clear words from Powell, because the December FOMC meeting is very important for the Fed and the general markets. So I think he will talk around it again. So he says, labor market is weakening, but inflation, we need to watch this. So overall, he's pressuring it down. So this is what I'm expecting. But if we see some clear dovish talks from him, as we said, I can well imagine that we can overclaim it and going for the 100k cluster again. So this is my current plan, and the FOMC meeting will be very, very device. Also, if we take a closer look at the SPX, at the S&P 500 index, we can see also that the index is in a very important region, because we are now at the $6,880 level, and we can see in general that we are in a very interesting movements since before the FOMC meeting, because also there is the market waiting, okay, can we see more dovish moves, is Powell cutting or not? If yes, also can expect here a overcome of the $6,880 level with the target of new all-time high. If it's more hawkish, then I expect another drop into the CTA pressure level at $6,710 level. So this is my current plan. Also the SPX is so in a very important and device movement at the moment, and we can see also only at these moves from last week that the market participants are really waiting for a clear move from the FOMC meeting. So basically next week's FOMC meeting will be very, very important. Here also the bids and asks map, we can see that are large bids below us. So if we can see a hawkish Fed, I can well imagine that we're still seeing a bounce first in the 75k region before going lower again. So overall, the 25% order book depth is still in a very positive way. This is very bullish, because it means that overall more bids are compared to asks below us. If we're seeing take a look at the 10% order book depth, we can see that we went for a quick time when we see the drop into the 85k area that we saw a positive bulk here, but after the bounce it went negative again. Here it would be also very important that if we can overclaim, let's for an example, the 90k area, that we still have a bullish 10% order book spot. So there it would be important to see a general spot bid support below us during an upwards move, because as already explained in the last update, if we're seeing something like this again with a negative one, we see another downwards move, which we saw. So the 10% order book depth is a very important indicator from my side. So overall, the next FOMC meeting will be very important. If it's more dovish or hawkish, this will also devise the movements from the SPX and above all for BTC. Ethereum is interestingly outperforming BTC because we can hold the 3K while BTC is below the 90k area. Such a risk appetite before an FOMC meeting is not really the best sign, because we need to see before an FOMC meeting normal such a risk reduction, and this is mostly the end of the risk assets, so BTC and Ethereum. Such an outperformance is very tricky, to be honest, and I'm not trusting this move, because if the FOMC meeting is more hawkish and we're expecting less rate cuts than before, I can really imagine that also BTC is dropping lower and Ethereum losing the 3k area again, with targeting the big long liquidation cluster in the 2.2k area. If it's more dovish, I can also expect here more upwards movement, but overall, as already said, it's not the best sign to see directly a bigger risk appetite when BTC saws only a small bounce, because we can see BTC is below an important level, and above all this not looking like a finished bottom. So when BTC will fall again, I expect another huge underperformance from Ethereum, because yeah, such underperformance while BTC not looking like a real bottom, yeah, it's a problem, to be honest, because it's not looking like market makers or in general market participants are betting on a sustainable bottom. It's either like they're going for revenge trading and pushing their capital into moving assets to gain their revenues back they lost in the downwards move the last few weeks. So, and above all, also the altcoins are still below the 50% wick fill area. I mean, we didn't overcame it sustainable the area, so it's still also here a resistance. So the outperformance from Ethereum makes not really sense, and I think this is a very fake move, especially when the FOMC meeting is more hawkish. Here also will be very interesting, the FOMC meeting and the general market sentiment in the next few weeks. If it's more dovish, I can well imagine more risk appetite at the altcoins also. I mean, it's not the best sign, especially as BTC can't find a really bottom, but we need to deal with it. So if it's more dovish and the sentiment is more bullish again, I can well imagine that we are bouncing here back above. If it's more hawkish, the 50% wick fill area is still a resistance, and we will target the 100% wick fill area in the $770 billion mark. So that's currently my side from the current markets. It will be very interesting, the FOMC meeting, also with the quantitative tightening and at December 1st, how the Fed will react in the background, bank stress, liquidity. If we are seeing some signs of a quantitative easing of next year, if Powell talks about quantitative easing, this is also a dovish sign, which would lead to a further pressure at the risk assets. So overall, the FOMC meeting in December will be very important. And to say it again, I'm not expecting really clear signs from Powell, because he knows when he's saying something clear, he can move the market directly in a direction. So if he's more hawkish, he can nuke the markets. If he's more dovish, he can push the markets. And this needs to understandable. What I also don't expect really, because we saw in the last few meetings that Powell was not really direct. So I mean, yes, if we're going here again, we saw Powell different views about how to proceed at December. I mean, only this sentence marked a local top at the SPX. We dropped over 6% because this was a more hawkish, and in general also the rate cut odds dropped over the last few weeks further down before we saw the law. And I mean, he didn't really talk it here like there is a problem with the rate cut in December. He overworded it and he didn't really say it clear. And I also expect this for the next FOMC meeting. And to make it clear again, we will make a live stream at the FOMC day so we can analyze it together what Powell is talking, if it's more hawkish, if it's more dovish, to expect further moves from the meeting. And so I expect this also. We need to really hear clear what Powell is speaking and if it's more hawkish or dovish. Above all, we have two liquidation classes, above us the short, below us the longs, so it's clear that if it's more dovish, we will went for the shorts. If it's clear more hawkish, we will went for the longs again. And overall, market makers in the background are also preparing for a volatility week, because we can see here the Bitcoin implied volatility index is spiking up again, and above all is above very important levels. So also here, and above all, the ATM implied volatility from last week, we saw very huge spikes on Friday. So in general, market makers are now preparing for bigger moves next week and hedging their calls in the background. So they are preparing for the FOMC meeting. This is also why in general we didn't see a real overcome, because risk reduction and everything is happening in the background. I mean, as I already said, this move at Ethereum is really random, because Bitcoin is more in the reduction mode, and we can see this also at the volatility. So market makers are preparing for volatility, making risk reductions, and are pushing their cash into volatility and pushing their money into volatility calls, and preparing so for the FOMC meeting, and also making clear for me again that the next FOMC meeting will be very important for the BTC movement. That's it for today's 50min market update. I'm very hyped for the coming week and the FOMC meeting on Wednesday. If you liked these updates, don't forget to click on the like button and subscribe to the channel so you don't miss further updates like this one. I'm very hyped and will keep you updated here as always. See you soon.